Welcome to Second Take, the show that focuses on the issues behind the news. Gold mining companies Randgold Resources and Pan-African Resources find themselves in a sweet spot as they thumb their noses at the low gold price and remain profitable. Mining Weekly editor Martin Creamer tells us more. Welcome, Martin.
Thanks, Shannon.
Now, both gold mining companies have managed to remain profitable in the last financial year, despite the low gold price. How have they managed to do this?
You know, it's fantastic that companies that really take their profitability seriously from day one, and I'm talking firstly about Randgold because I was there when it was born. You know, in 1995 I was there, up in Selby, Johannesburg here. You know, it was part of the split up of Rand Mines, and the Randgold Resources went on to the London Stock Exchange, and then you had Harmony Gold, you know, going off on its own here, and some of the other break little pieces of it. But undoubtedly, you know, Randgold Resources has done the best by far. And why? Because it's led by a geologist, you know, Dr. Mark Brister, and he is tight-fisted because, you know, geologists go and they discover. And they don't want to then buy someone else's discovery at an inflated price because they know that it's cost them like $25 an ounce to find this. Why should they pay over the top? So he's been very frugal from the start, and he's been involved in a simple mantra of discovery and development. And that has got him through this problematic period, because when you go to business school, you know, they say invest in the troughs and then harvest in the peaks, which is what he's doing. So, you know, when the price of gold is down, he's working like a beaver and actually putting money into growing. And then when the gold price jumped up recently to 1,900 for a period, I mean, he was reaping huge margins. But that's what the gold business is. It's up and down. So, of course, he kept that margin, and he was good enough to make sure, yes, we pay tax now. We pay these governments in Africa. We do our bit. But it also gives us a nice opportunity to then invest. And he went into, you know, Democratic Republic of Congo, and he put in Kibali, which is now pushing him further. So he's reached this wonderful sweet spot. Now, if you go then to a company which I haven't watched as closely, but, you know, the background of it is also fairly well known through Meterex and then Pan-African. You know, Pan-African has got this backbone of a long-standing mining area in Barberton. And that has been a good generation of high-margin cash flow, even when the gold price has gone down. So, you know, you've got to discover frugally, but then you've also got to develop very, very frugally. Then, you know, the gold price doesn't seem to matter because it never goes that low. These people can, you know, be 20% profitable at $1,000 an ounce, so things like that. So both of them are cash rich. You know, both of them are paid off their debts. And both of them are looking to pay dividends, you know, with the D word. You're not supposed to hear it at this time of paralyzation of the gold industry, but they're able to do it.
Pan-African Resources managed to obtain full capital for the construction of their Evander mine, but in a manner that limits their exposure to gold. Tell us about this.
Yeah, it's an interesting one. So, you know, you get their CFO, Kobus Lutz, you know, who comes from a good pedigree. I mean, he was in that group with Cyril Ramaphosa, who's now, you know, the deputy president of the Republic of South Africa. And he's innovative. So he goes along there and says, look, to Absa, why use my cash? You know, I will give you gold. I'm a gold miner. I can give you gold. So they agreed that he will pay for his infrastructure that he needs, you know, in gold. You know, 15,700 ounces over 4 years, which suits them because that is their product, you know. So, and it also gives you a fixed amount. You know, this is the fixed amount you're going to pay over 4 years, and it sort of hedges. You hedge yourself. And so it's an innovation is also very important, and they introduce it, these people who are close to their operations.
Now, Randgold Resources is diminishing capital expenditure and focusing on a strong growth outlook. How do they propose doing that?
You know, I thought this is crazy, but you know, he's saying we've invested all the money. Why go head over heels for expensive growth? It's time to harvest. You know, I've been working flat out for 19 years. I've got the 3 countries that I'm operating in. You know, one of my mines is problematic from a metallurgical point of view, but I'm assured of at least 1 million ounces million ounces of gold every year for the next 10 years, because that's the way I've set it up. And my capital now is decreasing because Kibali was my last big one, I will settle down at about from, the $750 million that they paid last year in capital will eventually go down to a sort of steady state 60 million, and that means that they're going to be more profitable because they've got these big number of ounces coming through, but their expenditure isn't that great. Their discovery cost, as we can see, is low. Their taxes, obviously they've got to pay those, but they're able to get that margin at this crucial time. And then they can use the D word again, that we're going to give you dividends, which is what the shareholders look to. So they're saying that, look, if you go into the mid-80s to the mid-90s, some of those stalwart gold companies, their share prices were rocketing. I think they spoke of Barrick, where the price went up 400% over that period, but they didn't grow their ounces because they had done their investment at that stage. They were then reaping the rewards. And then only when they started chasing ounces did their shareholders lose out. So, they're very cautious about buying someone else's assets. He said, like Dr. Mark Bristow, the geologist, I've built everything and I've still got problems. You imagine if I had to take on someone else's stuff, I think a geological mentality is quite important, particularly when you're going into Africa. And he had an early entry into Africa, Dr. Mark Bristow, for Rand Mines at the time. And I remember Peter Flack, who took over Rand Mines, and he said he was going in and just talking to everybody, but planning to retrench, like left, right, and centre. And when he went in to see Dr. Mark Bristow, he thought, I'm going to, his initial thing is, I'm going to be retrenching this guy. I'm going to tell him about. He said, and after listening to him, he said, you're going to be the CEO of this new company. And, it's done so well. And I went up to Mali with Dr. Mark Bristow, and I was stunned at the ululations of the crowd. They were so enthusiastic about what he had done for their country. And I sort of said to them, but why are you ululating like this, for this fellow who's building gold mines? And they said, well, before he got you, we were hardly earning $1,000 a year. Now, we can do that a month. Wow. So it does change situations, and his effort in Mali, I think, is it almost pays the civil service salaries, what he puts into that country. So it's a fantastic thing that these gold mines can do. And he certainly has done it, even though, he had some very hard knocks in the beginning with Syama mine, which he had to put onto care and maintenance in those early days, which, I remember vividly. Because the gold price had just fallen through the floor. And, you can be the best manager in the world, but when your gold price really falls, then you're in trouble. But he went in and he found Marilla the gorilla. He borrowed someone's equipment to dig a trench, and the next minute they found one of the biggest discoveries outside of the Witwatersrand. So it was a fantastic effort, and that has given that country 6 million ounces of gold. It's a lot of gold to produce. So it's amazing how geological backgrounds do help, I think, which we haven't encouraged in South Africa. The engineers have taken over here because our ore bodies have been so huge. You've got the big Witwatersrand, and you've got the big Bushveld complex. Don't drill, man, just put the shaft down. But it actually isn't the best way of doing things. And I think that Randgold Resources has been a great example. Pan-African now, also making sure that they get that surface gold. There's nothing like surface dumps. When there's gold in them.
Yes.
You don't have to go underground. You don't have to have that expense. If you get the metallurgy right, you get the recovery right, you're picking fruit off the trees there, which Pan-African is also doing to keep its business really profitable during this time of low gold price.
And on that note, what do you think the future outlook for gold will be?
Well, it's like paralyzed. That industry seems a little bit paralyzed at the moment, and because people just can't cope with this gold price unless they've been very frugal in their businesses and made sure they've kept that margin before they actually build a mine. They've got to work out what is our return going to be on this, and it must be below the lowest price scenario for gold. At least 20% below that, you must be making a profit. If you don't, you run into trouble. And we've seen some of the big companies try to merge. Then you see that they can't get on and they split apart. We're seeing that AngloGold Ashanti is having to do hectic things the Ashanti side of its business. You know, it used to be Anglo Gold, and then they bought the Ashanti assets in Ghana, and they got the Obuasi mine, and it's having to be, you know, reconfigured at the moment, which means that you know, a lot of people are going to lose their job, hopefully temporarily. You know, it's gone into a sort of a snooze mode, they call it. I think it's a nice way of putting it, saying we just got to fix this.
The pause.
And I think that when the South Africans went in there and bought it, they imagined all it needed was capital. But in actual fact, they now discovered it needs fixing and capital. But that's already after they spent the capital. So, you know, it's always a bit difficult. And so there's a lot of angst around in gold, because the price scenario doesn't look too promising. You know, it never comes out of that $1,200. Sometimes it touches the $1,300 an ounce range and then falls back. And the forecasts are all that it will fall lower. So gold is a tough business. That's why it's great to see Pan-African Resources, you know, on the Johannesburg Stock Exchange, really debt-free, got cash, talking dividends, and seeing opportunity, because there is some situations where people have drilled and they've got the gold and everything, but they've got no money to carry on with it. So there might be opportunities to take those over. And then Randgold Resources, which has been a, you know, seasoned campaigner, tough campaigner in Africa, and now really looking to 1 million ounces a year for the next 10 years. And you don't often see that long-term planning with the mines, but they're able to do this because they've worked out their reserves so carefully, and there'll probably be some upside on that.
Well, thank you very much, Martin.
It's a great pleasure, Shannon.
That's it for today. Join us again next week for more news analysis on South Africa's mining industry.